the big contrast between the monetary policy of the Bank of Japan, even though they've lifted rates off the sort of negative territory that we've been in for many years. We're still talking about a 0.1% policy rate. And obviously, since 2022, every other central bank in the world, sort of led by the US Fed, has been raising rates quite aggressively. So it's really that widening of interest rate differentials.
And Ray, there's also been some good news for Australians thinking of going to the United States, with the Aussie dollar close to its highest level it's been all year. So what's behind this?
Well, first and foremost, I would say it's the market getting more fearful that the RBA may not be done raising interest rates. So ever since we had that sort of high side print for CPI in Australia, the May numbers that we got in June, the market's been put on notice that inflation is not tracking down as rapidly as the RBA's own expectations. Now we're waiting for the Q2 CPI numbers that we'll get at the end of the month for a definitive read on inflation. But it really is that that concern that inflation isn't coming down, and markets have moved to attach almost a 50% probability to the RBA actually raising rates between now and the end of the year. So there's been some significant interest rate support that has come through in terms of money market rates.
So there's a bit of pressure on the Reserve Bank depending on what the next set of inflation figures say. So Ray, you are saying that the market's attaching a practically 50% chance of a rate hike next month. What do you think?
Well, it's about a 40 to 45% either between the August meeting and the following meeting in November. Our view at NAB is that if the inflation numbers that we get at the end of this month are no higher than our current expectation, which is sort of 0.9 to 1% for the core, what we call the trimmed mean underlying measure, then the RBA might sort of tough it out. It's obviously very concerned about the sort of full employment side of its mandate, if you like, or it's said repeatedly it wants to preserve as many gains in the labour market as possible. And if we do see further signs between now and August that the labour market is weakening a little bit and those inflation numbers are no higher than we currently expect, then for choice we think that a longer period of the RBA on hold rather than them necessarily cutting rates is our single best guess at this stage.
What if Donald Trump wins the US presidential election in November and he implements his wide-ranging tariffs that he's promised? How do you think that will impact the Australian dollar?
Not well, I'd have to say. I think that's the biggest single risk to our sort of central view, is that a weaker dollar will prevail over the course of next year, driven by Fed easing, and that will propel the Aussie dollar higher. The big risk is if, as you suggest, if Trump is elected and if he follows through on his sort of campaign promises, which remember is to impose an additional 60% tariff on all imports coming from China and a 10% tariff on all imports coming into the United States from everywhere else in the world, I've no doubt that will cause a big sort of risk-off tone in markets. It will have a depressing impact on global growth, and that is really key to the fortunes of the Aussie dollar. So at the moment, if I suggest that we think Aussie will be sort of north of 70 cents next year, in the scenario where that sort of Trump tariff war really does eventuate, I would suggest that we won't be anywhere close to that. But I have to say that my expectation is that a re-elected Donald Trump is not going to follow through on a lot of those trade tariff wars, in large part because I think it will be damaging for the US as well as the global economy. It won't be good for the stock market, and we all know that President Trump sort of tends to judge the success of his own policies, if you like, by what it means for stocks, and it certainly would not be a positive scenario for the US stock market. So it's a threat and it's a risk, but our best bet is that it's not going to eventuate.
Interesting time for currency markets ahead. Ray Attrill, thank you very much for your insights.
Thank you.